Hey, this is Jared with the Helton Group at Loan Depot, and today we're going to talk about the mortgage market and how it's kind of impacting things like we do every week. This week, I don't have as good as news. So it's been kind of a brutal week. You had all sorts of things that impacted interest rates, but the consumer price index, which is basically inflation, rose, which is not good for mortgage rates. It's up to its highest level since 1982, which in 1982 rates are in the 18-20% range. So I guess we have that to look forward to. Fed likely to increase rates, a quarter to 0.5% very soon, and then 3 to 4 rate hikes over the coming year. And then the purchase sentiment, the good thing is, 25% less people think it's a good time to buy, which probably is a little bit based on interest rates, but 69% of people think it's a good time to sell. So I think that maybe we'll get a little bit more supply and demand kind of coming into check, but demand is still high. I mean, we all know that because we're fighting for offers out there. So I know you guys are doing that. So how the rates look over the last 30 days, just basically just straight up. I mean, it's just it's been that way for a while. I mean, I think a lot of times mortgage rates are based off of you hear the 10-year Treasury, which is the highest it's been since the middle of 2019. If you look at the last 2 years, again, it's shot up past where it's been. So it's really a volatile market right now, and that doesn't mean that you shouldn't buy or people shouldn't buy. It just means you really need to be very cautious when you have pre-approvals out there, because someone that got pre-approved a month ago might not still be in the same qualification purposes as today. And then how that's impacting people's purchase power. Again, I do this based off of buying, not buying down the rate. So it's just a straight, not paying points on the loan. It's $400,000 purchase, 20% down conforming loan. So this is a little bit scary. So a year ago, and I'm trying not to be negative on this, but it really had a big difference on buying power. A year ago, $1,756 payment. Today, it's over $2,000 a payment, 2023, and literally last week it'd be $1,976. So you got $50 difference week over week in what someone's payment is going to be on buying that same house. And then buying power. Last week you'd buy a $412,000 house for the same payment. Last year you could buy a $489,000 house for the same payment. So this kind of doesn't look really positive, right? Because you're thinking that, my buying power is going down, but you also look at that is over the last year, the difference is, values have gone up, right? So if you buy something for 400, it's probably worth 490 now. So at the end of the day, it's always good to still buy real estate. It's a long-term investment and it still makes sense to do. And then historically, if you think about where rates were, I think this is back a few years, but in 1982, which is almost when we had the same inflationary numbers. Rates were 17%. And I Love Rock and Roll by Joan Jett was the number one song. So if you have any questions, feel free to reach out to us. We greatly appreciate your business. If you need anything over the weekend, we're here for you. And I'll talk to you guys later.